We back, baby. Yes, sir. We back. You feel me? Look here. Boy, I went in there to adjust that AC. I went in there to adjust that AC. And that thing said, a blue blue. A blue blue. Hey, could y'all hear me yelling through the house telling my son to call his uncle? He was indisposed. Did y'all hear me yelling through the house? Hey, Crash, call your Uncle Lumpy. Tell him to tell the people I'm indisposed right now. And we're back. Shout out to everybody that pulled back up. Let's get to it, man. So we opened up over here last night at 6:00 p.m. Had a little bullish gap up, slight bullish gap. Oh, y'all heard. Okay. That's good. That's good. So y'all know what was up. Y'all know what was up. I ain't have my fall with me. I ain't have nothing. I was stranded on death row. Okay, so we opened up here at that. What did we open up at? We opened up. Wait a minute. That's a bearish slap down. We had a bearish gap down. Right? We had a bearish gap down. All right, we open up here at 20,536.50, and then we price sold off. Right, coming down, taking out the sell side from yesterday afternoon. All right, retrace back up, took out the short-term buy side, displaced down into the bullish order block. Right, traded back up into the bearish breaker. Drop down again in the morning. Let's get the times of this. So we drop down here, going into the London kill zone, taking out the sell side, and then we displaced up, going into the London open, taking out the buy side and trading up to the new week opening gap from Monday. Then we displaced down throughout the rest of London, right? Coming up past the end of the London kill zone, trading down into the bullish order block from Monday morning New York session at 11:15. Traded back up into the bearish breaker that was created during the London kill zone, that 2:30 breaker there. Traded back up into that, going into the 8 o'clock hour, and then we traded down after hitting that breaker. Traded down, taking out the sell side, coming into like 8:30, coming into the news embargo time, 8:30, 8:45. Failed to take out yesterday's low. Then we displaced away, right? Displaced up from that 8:45 candle up into 10 o'clock, displaced away, taking out the buy side, traded back down into the bullish breaker and the 9:30 fair value gap, right? And during the lunch around 12:30, then we displaced away after that, trade and displacing up, taking out yesterday's high and taking out these relative equal highs there. That was there from overnight, right? That was the high of yesterday and the high at 4:30. Those are the relative equal highs that we took out here on this displacement up, right? Going into the from 12:30 up until 2 o'clock, and then the rest of the day pulled back into the range and consolidated, going out for the rest of the day. Now, looking at this right here, is there anybody in the Discord right now? No one's in the Discord right now, so I can't pick on anyone to come in and speak. But let me see who in the chat. Let me see who all. Everybody put a 1 in the chat so I can see who all in the chat. Everybody put a 1 in the chat so I can see everybody that's in the chat right now. I'm gonna pick a name. Now everybody don't nobody fingers work. Father Legends in the chat. AR Cooling in the chat. Tisdale in the chat. Rhonda in the chat. Valentine in the chat. Tish in the chat. Wayman. We going with you, Wayman Tisdale. Right? Since you say I don't be around a whole lot. I've been absent and stuff like that. What? We opened here. We came here. We went up there, and then we closed here. What is that movement? What is that price movement called? No cheating and helping, Wayman. Right? No cheating and helping Wayman. Got him! No cheating and helping Wayman. No, his name ain't Wayman. His name, what's his name? Is it Weldon? It ain't Wayman. Is it Weldon the Great? Wayne? What is it, Wayman the Great? What is that price? What is that move called? Right? We open here, trade it down here, trade it up there, and then close there. What is that called? While I go try to find this dude's name. Was it Wayman? It wasn't. It was Weldon the Great, I think. I think it was called. Was it Weldon the Great? What's that move called, Wayman? Welvin. It was Welvin the Great. Welvin the Great. Roy, but I'm gonna need help. Now I'll just talk about the name. Welvin the Great. That was the one that got him. I was like, that ain't Wayman. It wasn't Wayman the Great. It was Welvin the Great. Got him. Got him. All right. Roy needs some help, y'all. Wayman needs some help, y'all. What's that move called? Rhonda. Help him out. What is this move called here? We open here. Trade it down there, trade it up there, and then closed right there. All in nothing day. All in nothing day. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. We got AMD. We got market maker buy model. We got it. I'm giving y'all the clues. We open here. Okay, what is that? Open, high, low, close. It is actually open, low, high, close. That's what you put. I'm sorry. Open, high, low, close. What is that called? It's not AMD. What is open, high, low, close? What is open, high, low? What is open, low, high, close called? Power of 3. Thank you very much. Power of 3. Right? So, Roy, right? On a power of 3, hello. Why you said hello like that? Did you say power of 3? Oh, you just coming back after the Dookie experience? Okay. All right. So, with a power of 3, right? That's how price moves. That's how candles can be formed, right? So, the power of 3 is you open, right? You make a low, you make a high, and then you close off the high, right? And that's going to give you a bar, right? That looks like this, right? That's going to give you, we're going to have an open, low, high, and then a close. Right, that's what your bar gonna look like, okay? And your candle would look like this. That's your open, that's your close, right? That's your low, that's your high. That's what your candle would look like. Remember we had a little small candle like that, right? We had a very small little candle like that. That's what it looks like, okay? So it's a power of 3, right? And what everybody else talk about AMD, right? Everybody else talk about AMD. That's what, let me see. Like, power of 3 is the thing itself. Power of 3 is the noun, right? Let's do it like this, right? The power of 3, right? That's the noun, right? That's the person, place, or thing. The AMD, right? That's the verb. AMD is the verb of the power of 3. That's the action. The power of 3 is the noun. Power of 3 is the thing. The AMD is the action. That's the verb. Because during the power of 3, right, during this noun, right, you're looking for an area of accumulation at or near the open. You're looking for manipulation, right, taking it the wrong way, right, because this is the drawn liquidity, right, take it the wrong way. And then you look for an area of distribution. Where do we distribute? Above old highs. How do you know it distributed, Tim? Because when we got up here, we wicked off of it right there, right? So we got up there and we wicked off of it. It distributed the the long positions that it accumulated here, 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 here. Everywhere it accumulated long positions, right? They was accumulating long positions here too, right? Let me show you something else. This one right here gonna mess you up. If you don't know about ICT concepts, this one here gonna mess you up, right? It's obvious that we accumulated long positions here, right? Why is that? Why is it obvious that we accumulated long positions there? Gang. Somebody in the gang tell me why it's obvious that we accumulated long positions in this area right here. Why is it obvious? Because what? Because what? This one I need somebody in the Discord so they can talk to me. Because what? Somebody jump in the Discord and talk to me so we can go through this class participation faster. Right? Why is that? Let me put this over here so I can see if somebody decide to jump in the no, not balanced price range. Right? What did price do in this area right here? Right? When price dropped down here, what do we do right there? Took out lows. Very good. We took out lows. So it's obvious. No, not balanced price range. Stop. Don't shoot that no more. Don't say balanced price range no more. So we took out stops. So we accumulated longs. It's obvious that we did that there, right? When we drop below a low, smart money buys below lows. Okay? Now, what side of the curve is this right here? Right? Looking at this market maker buy model right here, what side of the curve is this right here? What side of the curve is that? What side of the curve? Not the left side. What side of the curve is this? With this market maker buy model, what side of the curve is this? The sell side. Thank you. We're on the sell side of the curve, right? So on the sell side of the curve, right, since smart money has uber deep pockets, their pockets are so deep, they start to scale into their long positions far before you and I realize that we are in a market maker buy model, right? And who can tell me where they are scaled? Where can you see smart money scaling into their long positions on the sell side of the curve? Right? Who in the gang? I really need somebody to pull up in the Discord so they can talk to me. Somebody pull up in the Discord and talk to me. Stop being scared. Stop being, I don't really know the answer. We sprinting. We sprinting. Somebody pull up in the, nope, not equal lows. Somebody pull up in the Discord. Remember, stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. Right? We done talked about this many a time. But somebody pull up in the Discord and talk to me. Right? Right? Let's go, Lump. Where is it obvious that smart money is scaling?
I missed the question and everything. I just got back. When you say pull up in the Discord, what was the question?
Okay, the question is, in a market maker buy model,
okay,
right? In a market maker buy model that we can see here, right?
Yeah.
In a market maker buy model on the sell side of the curve,
okay,
where is the evidence of smart money starting to scale into their long positions?
Where is? I guess when when we go to spooling, after you hit that purple line, what that purple line is? The new day opening gap or new week?
That's the new week opening gap.
Okay, I guess when it started spooling after it hit that.
Started spooling with okay. You in the ball. I know what you're saying and you're wrong, but you're real close. You're real hot right now. You're real hot right now. So, right? Think about it. You said when it starts spooling, right?
Yeah.
When price starts spooling, what is it? It's like a reaction. It just starts expanding. It moves, right? Okay. When we done talked about this, I know you don't do a lot of homework, but what caused price to come up here to this purple line? What are you talking about right there? What caused price to come up there?
The draw, the ARP or
no, not ARP, not just simple terms. What made price come right here? Right? You said when price went up there to this purple line, what made price go up there?
The OB?
This order block right here.
Yeah.
Right? How is an order block created? What has to happen for this order block to get created? Price has to. Price has.
Notes?
Right? The displacement. Okay, somebody said displacement in the chat, right?
Okay.
Okay, let's break it down to the don't think about super technical, right? Don't think about what made this take off up there.
The smart money, I guess.
The smart money did what? What did the smart money do?
The reverse. The smart money
reverse. Not the reverse, but what did they do to make the price go up there?
Manipulation?
No, what makes price go up? No, what makes price go up? Simplest term. What make it go up?
I don't know.
What make it go down?
I don't know. Give me the answer.
It's just not. Don't say again, hell.
What do you say?
Dude, you
say buying and selling?
Yeah, they bought done.
Buying makes it go up. Selling makes it go down. Okay. What's the evidence that smart money is starting to scale into their long positions? When they get into a long position, what they doing? They buying. And when smart money get into the market, what does the price do?
It take everybody out of it.
No, it's gonna go up. It's gonna be evidence of it going up or evidence of it going down. Right? So when you looking at a market maker buy model or a market maker sell model, right? If you look at the sell side of the curve, wherever you see a order block that creates a short-term bounce, short-term rally, smart money scaling in positions, scaling into positions, scaling in positions, scaling in positions, scaling in positions. They got enough. Reverse time. Let's go up. That's how you can see the evidence of them scale. So they start buying, right? Smart money started buying. Oh, when we came down, buying. Right? Consolidate, drop down, buying. Drop down, buying. Right?
What's that clue up top?
Huh?
That's a clue up top with it look like. See, I can't really see that. See, I couldn't see that.
That's it. That ain't had nothing to do with that. That was power of three. That was power of three. I said power of three was the noun and AMD was the verb.
Okay, I didn't see that. I couldn't see that.
Yeah, power of three is the noun. That's the person, place, or thing. And then AMD, right? Accumulation, manipulation, distribution. That's the verb. That's the action, right? So this is the thing. And then the action that this thing does is this, right? It accumulates, manipulates, and distributes, right? So we accumulate, we manipulate, then we distribute above that old high, right? And then I was saying this is how you can tell when smart money is scaling into positions. Now, taking it a step further, right? Looking at the market maker model, right? Remember when I said you can tell when they said when smart money starts to scale into positions, right? They start to scale in, right? They scaling in, drop, push up, they scaling in there, drop, push up there, right? When you get on the buy side right? What happens when price pulls back over here on this side of the model, right? Whenever
they give me an option to get in, opportunity,
right? Yeah, you get an opportunity to get in, but it's two things happening, right? It's two things happening when you're coming down, right? On this side of this over here, what is it called when you're coming down? In the market maker buy model, market maker sell model, what is it called when you're coming down?
Not sure.
But we got 10 minutes.
Okay. Not sure.
Somebody help them out. In the market maker buy model, market maker sell model, distribution, right? I'll put the re on the right. So redistribution, right? So we're coming down. So when we come up above this high, right there, right? And we go into this area of redistribution, right? If we take, let's take a little arrow, right? Let's find an arrow, right? Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Click there, right? And I pull this over here. What is that? Right there. What am I pointing at? Right there. What's that right there?
Say it again, Tim. What is that? Were you pointing at?
Yes, right there. I heard somebody say something. What you said, Hef?
Sound like he said order block.
Order block. That's an order block, right? That's an order block right here, right? When price is coming down, right? And smart money scales into a position, right? They're coming down, smart money scales into a position, right? When it's scaling into that position, right? Remember you said it went back up to that area right there, right? And what did you say it left behind?
That OB over there?
Yeah, it left that behind, right?
Okay.
It left an order block behind. So whenever smart money is scaling into their positions and we get the move there like that right there, right? This last up close candle before this drop right here, what is that? That's an order block, right? These last two consecutive down candles right there. So when we come up here and come above this high, where do we distribute positions at? We distribute above what? Old highs. We distribute below old lows. So when we come up here and then we get above these highs and we go into this area of redistribution, re on the right, right? We're coming into this area of distribution. Where do we go? We come right here to that order block. And what do they call that? On a market maker buy model, when you come back down into an order block on the bullish side, what do they call it? So the first thing is, we said was distribution. And what's the second thing that it does? What do they call that? When you come back into that right now.
Distribution and
it's on the market. The market maker model.
Retrace.
It's a re, but not that. Not retrace.
Reverse.
No, not reverse.
I don't know. What is it?
If you have a what you got to file if you have a car wreck? You file a what? An insurance what?
Reclaim the order block.
Reclaim order block. There you go, right there. right? We come down and we reclaim that bullish order block. What price is the algorithm buying at? What price?
We building
What?
the screen up.
What?
You covering up? I can't see.
Yeah, I'm at you. You should be telling me. You should be
Oh, I
telling
thought
me.
you was trying to show me the price. I ain't got no
I'm saying,
computer up right
but I'm
now.
saying you don't need. I don't need the exact price. But what price is it? Is it
Oh, you
buying
mean a
it?
discount and discount?
No. What is it buying? What price is the algorithm buying it?
You talking about that number on the side, the 20?
Don't worry about the number. Don't worry about the number. What is that number? Valentine got you over there on the answer. What is that number right there?
Let me see what she typed. I can't see it. Did she type it in the Discord or the?
No. What's this? The order block right here, right? This a down close candle. What's that price on the down close candle right there? At the top of the body of it, the open price, the open price of the order block. That's where the algorithm is buying. So on a market maker model, right? When you come up here above your area of a high and you distribute positions, you come into this area of redistribution, you're looking at the order blocks, the bullish order blocks on the sell side of the curve, watching for a price to see if this is the order block that we're going to reclaim and continue back up, right? You can say, hey, Tim, it's skipping over. I don't care how many it skip. it can trade down to as many of them as it want to, but you're just looking for when it come back down. You can sit here and look at every single bullish order block on this curve down here. You can look at the last up close candle of every bullish order block over here.
Oh, rock and roll.
Right? Right? You look at that, got that one. Right, that's all on this, and then this one, and then that one, right? You can look at every bullish order block on this side of this curve if you want to, right? Right here, you see we're just kind of consolidating right there. Where are we consolidating at? Right here in this area, we just consolidating up here inside that breaker right there, right? We're consolidating inside that breaker. So all these order blocks over here, right? We're working those along with that breaker, right? Once we drop down past that breaker there, right? We come down into that order block there, push up off it. We come down into that order block right there, and then we get going. We displace away, right? Create a fair value gap, which turns into a breakaway gap, and then we displace away again, taking out the high, right? And then we got this sharp move up right there. Why? Because once we traded up past the last area of accumulation, right, there was nothing in between the high and this run right here but that. So that's your low resistance liquidity run right there. Pyong, pyong, gone. Right.
Tim, open your screen all the way up. I'm looking on my phone. Okay.
And we're worrying about your little small. That's the iPhone 3, man. It's the iPhone 3, right? Everybody got that? There was also a bullish break. I ain't talking about the break. We talk about reclaimed order blocks right now. We're talking about reclaimed order blocks, right? That's what price is doing. Price in this market maker buy model right here on the way down, we're scaling into longs. Consolidate some, scale into longs. Drop down, scale into longs, right? Drop down, scale into longs. Smart money reversal, right? Pound, take off. Distribute above these highs. Pull back down. Reclaim order blocks, right? That order block and that order block. See, we touched that order block, pushed up off of it. Touched that order block, pushed up off of it. Got enough, let's go, right? Set a new order block, and that's it. Bob's your uncle, right? That's the workings behind the market maker model that you want to have inside your mind. So when you're watching price and you're trying to figure out how do I want to plan out my entries, right? This, you want to know the why behind this stuff. You don't want to just know, oh, it's a power of 3 day. You don't want to just know, oh, it's accumulation. You don't want to just know, oh, we just swept some stops. Oh, you don't want to just know, oh, there's a bearish fair value gap. You don't want to just know, oh, there's a new week opening gap. You don't want to just know, oh, there's equal lows. You don't want to just know that, right? What do I always say? Squanch up the chart, look and see where you are in price, right? If you're in an area, even if you're in an area of this huge consolidation right here. We've been consolidating in the same area forever, right? We've been consolidating over here since the 17th up until now. We still in this same little area. But inside that little area, you see how we just mapped out what we did today inside this little area of a consolidation, right? Inside this area of consolidation, mapped out what we did, right? I took trades inside here in the afternoon. But look, we're in this big area of consolidation. We ain't going nowhere, right? We still neutral on the short-term bias. Yeah, the overall bias is bullish, but right now we're still neutral because it ain't going up or down. It's not moving outside. We haven't taken that high or that low yet, right? We've just been chilling right there in the middle, right? So you always want to know the why behind all of the everybody say, what's the best ICT concept? Understanding how price moves. What's the best ICT PD rate? There is none. There's no best. Understanding how price moves is all you need to know. If price does this, somebody finish this for me. If price does this,
then it should do that.
Then it should do that. That's all you need to know. If price does this, huh? I ain't got my phone. I ain't got my phone on me. Do I need to go get it? Yo, hold on.
Your mic was just chopping up. I ain't hear what you were saying. Tim, you there?
Nah, I got the headphones on. I don't know. I'm dropping.
What's that?
It's in my headphones. I hear you saying something, but I can't make it out. It's in my headphones.
Oh.
Okay, what you were saying?
No, I didn't hear what you were saying. Your mic was chopping up. I didn't hear what you were saying.
Oh, it probably been
It's good now. It's probably because you had walked away or something. I didn't know you walked away.
Oh. Okay, so everybody got that? Everybody good on that right there? Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. Right? Always remember all of the concepts that we've studied. Right? It's not just about the strong PD array. It's not just about, oh, I got to get this new model. It's not what makes you profitable. Well, one thing that makes you profitable is understanding what price is going to do and then engaging with the market from an educated standpoint, right? So if you understand that, hit mute lump. Hit mute lump.
Oh, my bad.
Right? If you understand that we you can see the signatures of, okay, we dropped down, right? Came here, pushed up, dropped there, right? Right, we set equal highs, we came down, failed to take out the equal lows, and then we displace up here, right? We displace up here. Now we know we're on the right side of a market maker buy model because we got a break in market structure, right? Took out another high. And then now, since the overall time frame is bullish, now we can say, hey, we're on the right side of a market maker buy model, right? We came up and took out every high except these equal highs up here. Now I can look for an opportunity to go long because the overall time frame is bullish. We're on the right side of a market maker buy model, Now, let me look at this market maker buy model and see when I can engage. What can I use to engage with the model, right? Let's find us some ARPs on my structure time frame, right? We have, this is our price run right here that gave us our market structure shift, right? We have a change in the state of delivery. I need to make a template for a change in state of delivery. All right, we have a change in the state of delivery here. Okay. All right, we got a change in the state of delivery there. We have a bullish break in market structure here. We got a bullish break in market structure there. We have a bullish fair value gap in the discount here. Okay, bullish fair value gap in the discount there. We have a bullish breaker. This is kind of overlapping. This is kind of overlapping here, but I'll just, and in this case right here, we actually got two bullish breakers back to back. Pick your poison on which one you would want to use. I'm not going to extend the breaker. I'm not going to extend the breaker just for sake of clarity. Right? So you can either use that bullish breaker or this bullish breaker here. Right? This is the actual bullish breaker right there, the whole size, but this is the last up close candle. Right? And I'm using this one as the breaker there. Right? Because price came up here. We pulled down, made another high, and we pulled down. So you got two breakers right there, back to back. Okay? So this is your bullish breaker. Right now, these are all of your anticipatory reactionary points on your structure time frame. Right? On your structure time frame. So now, you can look in here, right? You can look in here for for the reclaim, for the bullish order blocks on the sell side of the curve that coincide with your discount PD arrays, right? And at that time, where are they, right? You have one here, right? You got one there, okay? You have one here. God dog it, come here. All right, you got one here. And now this one here, right there, you got one there. That's the last counter there. You got one there, right? And you got one here. This the whole order block there, right? You got the whole order block there. You really, you want to keep your focus for real on the last candle. That's like the main focus for the reclaim order block. But I like to watch the entire, you know what I'm saying? I like to watch the entire order block when it comes to this. So now you got all the order blocks over there that we can possibly reclaim, right? If you want to watch that too. All right? So now when price is up here doing this right here, right? Have we caught ARPs? No. We haven't come to any of our ARPs, so we're not looking for a reason to go long. We're just watching price on this 15-minute time frame here, right? Just watch, because we haven't come to any of our ARPs, okay? On this candle right here, when we trade down into that, right? Have we hit any of our ARPs yet on this candle here? Yes, we have, right? So let's mark this candle there so we know when anything to the right of this this dotted line, this is after we're inside our one of our ARPs. Okay, so now as soon as we hit it, now we're looking at our entry time frame, looking for an opportunity to get long, right? So now we're on our entry time frame, right? We're on an entry time frame right here. So we come into it here. This is the candle when we start watching price. Let me spread this out some, right? We already know what's over there. We ain't worried about all that, right? This is the candle when we start when we on our entry time frame. So we come here, we're inside the breaker. We hit our change in the state of delivery right there, right? We push back up, right? Then we come down and we push up here to this bearish fair value gap right there, right? We push up there to this bearish fair value gap right there. Okay, at that time right here, right? Yes, we got some displacement up there. Okay, but what do we not have? And this right here, I remember a long time ago, somebody said, Tim, what's the difference between a shift in sentiment and a breaking structure for you, right? Because if you look right here, okay, this high right there does not take out a low, right? So when we trade up past that high, for me, little Timmy Rogers, right? This is just a shift in sentiment, right? That's not a break in market structure for me. Okay, that's not a break in market structure for me because that high right there did not take out a low, right? I would need for price to trade back above at least this high right there before I consider it a break in market structure on this move, right? If we take out that high there, then I'll be like, okay, I got a break in market structure on this 1 minute, right? But trading above this high, just a shift in sentiment. Don't do it for me, okay? Then you see price comes back down, right? And we trade down, right? Below that low right there, right? We come down, take out that low, and then we trade back up above that high right there. This high took out that low. This high is a part of this whole run right there, right? But that high took out that low, right? So we came up, created a fair value gap, right? And then we pushed up and took out the main high right there. Okay, that's the parent high to this high, right? So we got a breaking market structure there with another breaking market structure there, right? And then we get that breaking market structure there. So now we got a fair value gap there. Let's mark out our fair value gap. Okay. Fair value gap here. All right. Fair value gap there. Okay. And then we get an expansion candle on the third candle of this fair value gap. Okay, so then this candle here trades up above that. This candle does what? It's right. What did this candle right here? When this candle closed, right? What did that confirm for us? Right? When this candle closed, what did that confirm for us? That confirmed that this was what? Right? Would that shift in sentiment be considered inducement? I guess. I guess you could say that. Kind of like tricking people in. Kind of tricking people in. You know what this is right here? You know what this is right here? Right? Why do you pick that spot? It would need to come. All right, I ask again if I forget. Right? when we did this right here, right? What is this right here? Who could tell me what this is right here? When we came above there and then we went below there, right? Who could tell me what that is right there? Yes, it confirmed it was a breakaway gap. Thank you. It confirmed that was a breakaway gap. Why? Right? Because when we came up here, that candle made us think, oh, I want this to be a breakaway gap because it's an expansion candle on the third leg. This candle right here created a new fair value gap. So now it just confirmed that that's a breakaway gap, right? So now that we confirmed that's a breakaway gap, and then we created a new fair value gap, right? And then we got this huge breaker there, right? So we got buy side delivery, sell side delivery, right? Trade back to the top of it, and then we leaving that area. Now we're looking at this right here as a balanced price range, right? Price is exceedingly bullish. So in this case right here, right, we have the last up close candle of the breaker right there, and that's the only, right, that's the only PD array right now that offered an entry on this time frame, right? Sub 1 minute, you might have got something else, but right now, the last up close candle of that breaker, right, on the wick of that is the only spot that offered an entry, right, prior to coming here, right? So that's the only spot that offered an entry there. If you don't trade off of breakers there, your next opportunity came once we took out that high, right? And then we traded back down, right, into that breaker right there and that fair value gap right there. Okay, would I have taken that fair value gap right there? Probably not. I probably would have got in over here somewhere, right? I would have got in over here somewhere off of an order block or something like that, because we had this big expansion move right here, and then we had all these breakaway gaps, and the way price had been trading, I would have need to see it hold up on this and then give me some more confirmation to get in on an order block or a fair value gap over here. But that's just my trading style. And then we get the blast off to the moon off of this area right here, where I said I would have been looking for an order block or a fair value gap trade, because I wouldn't have want to try to trade on top of this huge buy side imbalance, even though this right here is looking like a balanced price range. The way price had been chopping all day, I need extra confirmation at this point right here. Now, I think that's all I'm going to talk about for the price action, but let me go back and see what she said. She said, wait a minute, I see another one. So on the right side of a market maker model, we should anticipate price returning to an order block. Yes, you can use that. You can use order blocks on the left side. Once we trade back into those areas, look for order blocks in the discount or premium where you're trying to buy or sell, and see once price come to your, you know what I'm saying? Like if price come back to your breaker mitigation block fair value gap on the right side of the model, you can look over and see, okay, we're right there reclaiming that order block there. You know what I'm saying? We're reclaiming that order block there, because, you know, you're going to, is it going to reclaim every order block on that side? Nah, it might during some time, because as it's coming down on lower time frames, it's constantly touching these prices, right? So is it going to be apparent that we're reclaiming this order block on every level? No, because on a 15-second chart, when we came down here in this wick, you know, when price be moving up and down like this right here, you got 1 second, 2 second, 3 second, 4 second charts where it's buy, sell, sell, buy, sell, sell, buy, sell, sell, buy, going as that 1 15-minute counter is printing going up and down. You got lower time frames that's reclaiming order blocks, going back to breakers, going back to fair value gaps, going back to this, going back to it's constantly doing this all day long on different time frames. So what time frame you see it happen on might not be the time frame you're watching, but when you understand the concepts, you can say, okay, this and this and this and this and this, right? That's why I like to know all the PD arrays so that like right here, I know, okay, it didn't come back down to my fair value gap. So maybe I want to watch a breaker. Maybe I want to get long on a inversion fair value gap. Maybe I want to, you know what I'm saying? Once we create this inversion fair value gap, if we trade back down into that inversion fair value gap, I want to get long off that because it didn't come back down to that bullish fair value gap right there. I want to know all the concepts so I can decide how do I want to enter. It's best to start with just one entry until you perfect that and you understand how to trade. But then when you understand all the concepts, then you can start to pick and choose your entry model, right? Would that shift? I said answer that. Why did you pick that spot to say we would need to come back to? Right? Would you prefer the high at 1221? Why did you pick that spot to say we needed to come back to? You talk about when I was talking about the break-in market structure. Was you talking about the break-in market structure here to learn and share? On the was the 1 minute? Yeah, we was looking at the 1 minute time frame. We was talking about here. When I said on this move up right here, I would need to take out that high before I considered it a break-in market structure. Like this, taking out this high right there, right? See what we got, like a high with a low, a high, and a lower high, right? That's a swing high right there. That swing high did not take out any liquidity, right? So when we trade above that, for me, that's not a break-in market structure. That's just a shift in sentiment, right? We got a swing high here. You got a high with a lower high and a lower high. That swing high took out that swing low, right? So this swing high took out liquidity. So if we trade back above that high right there, then that's a break-in market structure for me. I know that we took liquidity, right? I know that we took liquidity on that swing high. So if we trade back above that swing high, then that's a break-in market structure for me. Okay. Get it? Got it? Good. Now, back to the, you could pick that. You could pick that, but this swing high, right? This swing high is the start of that move right there, right? The market came down, went up, came down, right? So this right here is a price leg all in itself, right? The market went up and went down. This is a price leg all in itself, okay? So this price leg here took out liquidity, right? Came up, took that out. You can say, I want that to be my break-in market structure for my trading style. You can say that, right? Because that swing high is the parent move for this entire leg down, right? This is your dealing range right there. From that high to that low. That's your dealing range right there. You trade back above that, gives you a break-in market structure. All right? So, nobody never answered this right here, right? We'll talk about this, right? What do I've been pointing this out for the last 4 days, if not anything. We're down here looking for an entry, right? After this line right here. What did price do right here? Right? Then what did price do right there? All right? Nobody's stealing. What is this right here? Remember I told y'all, what is this right here? And don't say Judas swing, right? Don't say Judas swing. What is this right here to me? I've been talking about it for the last umpteen years. Kashai don't pull out that little 22 no more. Don't say Judas swing. I've been talking about this for the last few days. I know Tish know. Where Tish at? What is this right here, Tish? This is my what? This is my what? Huh? Where you at, Tish? Where you at, Tish? This is my what? What y'all said? Y'all talk about some y'all answered. What did y'all say? Y'all did not answer. Because I don't see it up there. My what? What signature? What kind of signature? That's my what? Not just signature, that's my what? Favorite. That's my favorite signature. Yeah, AKA the wig snatcher. That's right, J-Rock, the wig snatcher. You feel me? So we in here and we're looking for we on this side of the market maker model, right? And we're looking for a reason to buy, right? We come down here, we're inside our anticipatory reactionary point here, right? We make a low and we push up here. And where do we push up? We push up above that high right there. That's what we said it was, our shift in sentiment, right? Remember we traded above here? We said that was our shift in sentiment. When we traded above that high, right? What did the market do immediately after trading above that high, right? It immediately ripped people face off, snatched a wig that got in on a breakout right there, right? I love to see the algorithm entice people in the right way, immediately punish them, and then turn around displacing in the direction of my, my bias. Now I know the algorithm is actively doing something. It put traders in the right way, punished them, took them out, right? Punished them, got them scared to participate because they said, man, I thought it was going up and I just got stopped out, right? Tricked anybody in that want to go short, right? Tricked them back in and then immediately ripped their face off. And now this breaker's job is to keep them underwater who tried to go short. Everybody that went long right here, now they scared to participate because they said last time I bought on a breakout, I got my butt handed to me. So now they scared to participate. My favorite signature. Go in, sweep the low, and then displace. I love to see it. And I love to see it right there when we at our anticipatory reactionary point, right? And it go in the direction that I want, right? Rip back, and then rip back. But Tim, what if it don't go in the direction that you want first? What if it take out the lows, and then if it take out the lows and then take off, right? That breaker's job is to protect that low. So now I'm trusting that when it comes back here, it's not going to keep going down because we at an anticipatory reactionary point, right? And now I got a breaker, right? Right here, right there, I just got a mitigation block, right? And remember what I told y'all with my back testing of my trading style, the breakers with the fair value gaps, I had a stronger win rate than with the mitigation block with the fair value gaps. That's why that there is my favorite signature, because I know the algorithm is tricking people in, right? Tricking people in and getting ready to rip-a-dip they face off. What else y'all got over there? Why would you prefer the 1221? That's what we just talked about. Confirm the breaker. Confirm, yes, Judas. Looks like, sorry, I had the same question. But couldn't you have taken an entry on the 15-minute time frame when price? Yes, you could. You can trade on the high time frame. We were just looking at the lower time frame entries. We talked about that the other day, right? Soon as it come back to your 15-minute on this calendar right here, soon as that calendar there touch your 15-minute PD array, Ain't nothing wrong with going long there. You just have to manage it. You have to manage your stop based off the 15-minute, right? You don't want to put on your position, then drop down to the 1 minute and try to find somewhere to put your stop. If you put on your position on the 15-minute, right? If you're coming in at the high of that breaker, right? You got to have your stop at the low of the breaker on the 15-minute or below the swing low, right? Lower the breaker or below the swing low down there or below that swing low over there. You know what I'm saying? Or below that swing low right there, right? So you got below the breaker, below that swing low, below that swing low, below that swing low, whatever your risk management. But this is the swing low for the breaker leg, right? That's your breaker, right? This leg right here is your breaker, right? So that's the swing low below the breaker, mean threshold of the breaker. However you want to do your stop, that's where you place your stop based off the 15-minute, right? But this is just when you're looking for lower time frame entries to get a better risk to reward, because 9 times out of 10, if you're entering in off the 15-minute, it's going to require a larger stop loss than if you're entering on the 1 minute time frame. Yes, the red candle. Yes. Why not the swing high above? Okay. Overall swing, understood. Did that help? I answered no juice swing. I'm thinking that signature. Favorite, snatch the wig. When it punishes people. You're welcome. That's it, man. That's all I got. I don't see nothing else in the chat. Are all hearts and minds clear? Did y'all learn anything today? If y'all learned something this evening, share it with somebody who you think could get something out of it. Right? Share it with somebody who you think could get something out of it. If you are interested in joining the Discord, right? If you're interested in joining the Discord, please don't pull up in the Discord if you're expecting call out service, if you're expecting people sitting there talking trade and talk all day. If you toxic, don't pull up with no toxic energy. It's like we real chill. It don't be super active in there. I'm saying, I think I'm the person that do the most activity in there, because like I say, it's just giving access to me, like my extra time as a thank you to the people that's paying for the monthly subscription. You know what I'm saying? So, mentees, tomorrow is Wednesday. Please pull up with, based off how we've been doing with me doing this class participation on these lives, I should have so many questions on the homework review nights. Y'all know I don't mind calling people out. Yes, we got the toxic tier for $99 a month. If you want to be toxic, sign up for $99 a month $99 a week for the toxic tier. You know what I'm saying? If you want to be toxic, $99 a week. $99 a week. You feel me? Okay. All right, take it easy, C-Walk. We about to get out of here, man. I appreciate y'all for hanging out with your boy. Homework review tomorrow night. Y'all should have a bunch of questions, because y'all was struggling with what I was asking tonight. And all of that is in the mentor. Matter of fact, talk about market maker models. That's some of the later. Now, I can see if I was talking about stuff from week 1. But the market make, let's go look and see. Before we go, I want to see what week were we talking about the market maker models and the reclaimed fair value gaps. Let me see. Playlist, the art of reading price action. Okay. Order flow, market maker models. 1, 2, and 3. I think the reclaim order block was week 18. Right? Week 19 was the last one. Power of 3. Right? Y'all can't even see my screen. Power of 3 was the last week. That was the last video. Market maker models. This was part 3. And I think that was when we talked about reclaimed order blocks. Tish say the market maker models a struggle for me. I ain't gonna lie. Right? We don't go with the excuses not. Right? Let me see. Power 3 slides. Power 3 slides. I don't want to dox myself. Let me move this over here. Let me see here. Documents, Google Drive. I need my Google Drive. Wait a minute. Documents, the art of reading price action. Where's the art of reading price action? Futures for beginners. I want to trade slides. No, that's I want to trade. Where did I put the art of reading price action? Mentorship videos. That's what it's called. Okay, mentorship videos. All right, market maker model 3. All right, let's see what this is. Market maker model 3. Let's see here. Oh man, it's trying to make me sign in. I ain't signed in on this computer no more. Hold up, let's go to the PowerPoint. Market maker model 3. All right. Let's see here. A reclaimed order block. So it was the next to last one when we talked about reclaimed order blocks. Right? Reclaimed order blocks right here. Sell side of the curve. Right? See? Line, right? Hey, bullish reclaimed order block is a candle or bar that was previously used to buy price, and a short-term bounce confirms minor displacement. In the buy side of the curve, the old blocks will be reclaimed longs. Ain't that's what we said? When we come down over here, they start buying, it bounce up, buying, it bounce. Ain't this what we said tonight? If y'all heard me say this tonight, put a 1 in the chat. Who's struggling? Right? Who said I'm struggling? Tish, Valentine, did y'all hear me say this tonight? I said when it came down and you made that order block and it bounced up, what it said, right? A short-term bounce, minor displacement. That's a bounce. That's a rally, right? And on the other side of the curve, the right side, these old blocks will be reclaimed longs. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. And here it is, you know, when we look at it over here, right? There it is there. When you're looking at it, see, they came over there reclaiming. You know what I'm saying? Going over there reclaiming order blocks. And the same thing for the sell side of the curve, right? Same thing for the sell side of the curve. Stacks on stacks on stacks on stacks. Power of 3 was video 19, right? Power of 3. Right there. Power of 3. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. So, you know what I'm saying? This all fun and games. This is all for learning. Right? This is all for learning. This is what I want you to understand. The important part of this is understanding what price is doing. What is price telling you? What are the signatures that it's leaving for me? Even in chop, it's going to be leaving little signatures, right? Because they can get in there and they can hold price. So reclaimed order blocks are breakers. It could be a breaker. Yes, it can be a breaker. It might be a mitigation block, right? It may be neither. You know what I'm saying? It's just a reclaimed order block, because you can have a order block there, right, without that displacement leg, so it won't be a breaker or a mitigation block. You know what I'm saying? You can have an order block, right? You can have an order block just sitting in the middle of, like, you can have a down close candle right here. That'll be an order block just sitting there. but it won't be a breaker or a mitigation block when you trade back to it. You know what I'm saying? You ever seen when prices like running up, right? You ever seen when prices running up and you get to it like right here, right? Right there. That's just an order block just sitting there by itself. You know what I'm saying? You don't have like a displacement leg, you know what I'm saying? So when you come back down to it, right, you don't have like a breaker or a mitigation block. Like here, you got an order block just sitting there by itself, right there, right? But when you come back down to it, right, you don't have like a breaker or a mitigation block sitting there, right? You just got an order block sitting there by itself. So it can be a breaker or a mitigation block, but you know, feels like I kind of know most of the individual PD rates, but putting it all together is where I tend to get again, right? That's where it's all about what is price. That's when it's not so much about the nouns at that time. The PD arrays are the nouns, right? Those are the nouns. So you want to focus on the verbs, right? You want to focus, are we in accumulation, right? Are we in accumulation, right? Are we in manipulation, right? But Tim, that's expansion. Yes, it's expansion, but is it manipulation expansion, or is it just expansion on the distribution side, right? Is it manipulation expansion, or is it distribution expansion? Right? Because you're going to have accumulation, manipulation, and then distribution, right? How do you get to the manipulation? Through expansion. How do you get to the distribution? Through expansion, right? What's the difference between the expansion and the displacement? The expansion is a one-sided move, but the displacement is a one-sided move that's leaving imbalances. Right? It's displacing rapidly and it's leaving imbalances behind. It's leaving little footprints behind. Right? Where are we in the market maker model? Right? Where are we? Should I be looking to buy or sell? The higher time frame is bullish. I only want to participate by buying. Okay, so I only want to be participating when we're on I don't want to be participating when we're on the right side of a market maker buy model. Right? If I look at this and say, hey, this is a huge market maker sell model right here. Right? Then I don't want to participate until this sell model is complete. Right? When will it be complete? Okay, if we come below there, I'm going to see if we're complete. If we're still not complete, when we come below there, I want to see if we're complete. Why? Because these are areas where price consolidated on the left side of this curve, right? If you're looking at it, if this is your whole time frame that you're looking at, right? And then if you're looking at, let's see if I squeeze this up enough because this is a 1 minute chart, right? If I squeeze this up more right there, now this whole little market maker sell model that I was just looking at right there, now you can see that that was just the top of this entire market maker buy model right there, right? So now that we've completed that market maker buy model, right? Now you want to see, do we start a market maker sell model, or do we start a new market maker buy model because it doesn't want to go down below? We've traded back down to here, right? Does this complete this little short market maker sell model, right? Now you want to see, do we create a new market maker buy model here? Right? Who knows? I would want to see us drop down and then come here and break above there. So I'll be like, oh yeah, we got us a new market maker buy model, and I can attack that high right there. Right? So look at where you are, draw out the narrative in your mind or on paper, and then when it starts to play out, say, yeah, that's the purpose of the weekend chart prep. That's the purpose of looking at it day to day if you're an intraday trader. Right? You look at it day to day to say, okay, where are we now at 9:30? Come here at 9 o'clock. Where are we now? What did the London do? What did the Asian do? Okay, this morning gonna be trash. I'm gonna come back this afternoon. I feel this way too. But the other day, Tim went over this to help me better understand how to apply it and create narrative. It was on 10/19/24 live. That's what I'm talking about right there. Y'all give it up for Kashaya and Here to Learn and Share. That's what I'm talking about right there. Gave her a timestamp and everything of where to go back and look at the live, say, hey, I was struggling with this and this helped me out. Go back, look at this video right there, and this helped me out. Y'all give it up for Kashaya and Here to Learn. Man, y'all better give it up for Kashaya and Here to Learn and Share in the chat. Ain't nobody gonna give it up for Kashaya. Man, my feelings hurt. We done. Live stream over. My feelings hurt. Ain't nobody give it up for Kashaya and Here to Learn and Share. My feelings hurt. I'm gonna cry when it's too late now. Y'all can't clap now. It's too late. My feelings already been hurt. My feelings already been hurt. Hey, but seriously, this is what it's about. I'm gonna go full screen because I'm done talking about the charts. This is what it's about, right? I'm pull the mic up. I'm relax back. I turned off my camera. My foot hit the y'all still there? My foot hit the thing up under there. I turned off the camera and the lights and everything. My foot hit the power strip down there. But I say this all the time, and this is what I'm talking about when I say it's not about the PD arrays, right? What did I have to keep saying tonight? Every time I ask y'all something, I say, stop thinking so deep. Go simpler. Right? I'm like, what made price go up there? The order block, the mitigation block, the power of 3. Think simpler. Dumb it down. Go basic. Right? When price is dropping, right? Price is dropping to give the smart money an opportunity to buy in a discount. Right? It's giving them an opportunity to buy in a discount. So if you want to buy, you want to wait for price to come to an area of discount or at least fair value. Right? Where is fair value? Right? Let me ask y'all a question. Where is fair value in the sense of your dealing range? Right? Where is fair value? Right? For y'all that's left in here, there's a couple of y'all that's still left. Where is fair value in the sense of your dealing range? Equilibrium. Right? So if you want to buy, you're looking for price to either come back to equilibrium at least or lower. The lower in discount it goes, the better price you get to buy. Right? So just think about it. I'm going to the store to buy something and I want the best possible price I can get. Right? If it doesn't come to your price, that's okay. Live to trade another day. Right? Don't buy it in a premium. Right? Once you figure out, okay, price does not want to come down here, why not? Is this a balanced price range? Is there a breaker there that's stopping me from going? What's stopping it from going down there? Oh, this is a balanced price range. Oh, it's reacting off of a higher time frame breaker. Oh, it's reacting off of a higher time frame low. Oh, it's reacting off of a higher time frame fair value gap. Okay, I see now. That's acting as support. It's acting as resistance. I see now. Now I need to adjust my shot group. Okay, now I can see that price consolidated here. That's the equilibrium of this price range. So if it drops below that, I'm in a discount. I can buy here. Or if it goes above that, I'm in a premium. I can sell here. Now it's at my anticipatory reactionary point. Now I can go to my entry time frame and start looking to see, did it sweep liquidity on this time frame? If it already swept the liquidity, liquidity, now I can look for the displacement and I can look for the entry. If it hasn't swept liquidity on this time frame, I need to wait for it to sweep the liquidity because I'm in the premium and I want to sell, but I want to see it sweep liquidity first, because if it doesn't sweep liquidity before I get in, when I get in, I may become the liquidity. All right. All of this stuff you're thinking about before you even push the button. And then once you see if price does this, then you start looking for your Intra-Day raise, because it should do that. That's all I got, man. Mentees, y'all pull up tomorrow with some hard-hitting questions. For real, for real. Because looking at tonight, I shouldn't be... E-Rock, you ain't know I came back? E-Rock, this was one of them ones. And guess what? Just because I had to delete the other one, because I had to go doodle, I'm going to delete this one too. So you missed that. Sorry, not sorry. Sorry, not sorry. Hey. Hey, man. I appreciate y'all for tapping in. Them just jokes, Tish. I'm not going to delete it. Again, if you don't know who it ain't nothing but 18 people left, so y'all know who I am. Mentees, I'll see y'all tomorrow at 7 p.m. for homework review. Pull up with your hard-hitting questions, man. To everybody else, if you're not a mentee, I'll see y'all Thursday night at 7 for the price action recap. With these price action recaps, I've been trying to teach something, because it gets boring just saying, hey, this what price did, this what price did. But hey, I'll see y'all on the next one, man. It's your boy, Timothy Lee Rogers Sr., a.k.a. Run You Gunner. Y'all be safe out here in the trade streets, man. I'm gone. Yeah.